Bitcoin has had a volatile November. It's up more than 15% since the start of the week, after previously hitting a 6-month low on concerns about regulation, all of which have weighed down on the price. But just look at this. So you're at about 9,000 at the beginning. Then you drop, but you drop very steeply, a small, gentle slope, and then drop very steeply down at 7 to 6 and change, and then back up where we are. Windsor Holden is a payment consultant, joins me from London. I suppose, why?
Hi, Richard.
Why the sharp fall?
OK, it broadly echoes something that happened 2 years ago, and in both cases what we have is regulation from China. Now, 2 years ago, what happened was that the Chinese were particularly concerned around a number of factors. First of all, money laundering through cryptocurrency, and secondly, flight of currency from China itself. So they imposed a number of restrictions about trading on Chinese exchanges with fiat currency. Now, that's been stepped up with this latest set of restrictions, where effectively all domestic trading has been prohibited. And in both cases, what you've seen is pretty much a 20% drop in the value of the cryptocurrency as a result.
There's a slight resurgence, it's come back again. But has Bitcoin now become inextricably linked with any form of restriction that the Chinese would put on?
I think the answer to that is probably yes, and the reason for that is the volume of trade that occurs within the Asia-Pacific. Within China itself, the volume has diminished, fairly significantly since the restrictions were put in place around about 2 years ago. But you still have something like 40% of the global trade still occurring within the Asia-Pacific. But what was particularly interesting, I think, last week, we saw the Chinese government really trying to emphasize the fact that there is no correlation between Bitcoin and blockchain. That is, the fact that the Chinese government is very heavily engaged within blockchain activities should not be seen as an endorsement of Bitcoin.
No, but it which is a valid point in the sense of Bitcoin and blockchain are most definitely two separate things. However, as a store of value and as a mode of currency, we've always known Bitcoin's a bit dubious. But this reinforces the point, doesn't it? Because any form, I mean, the last year or so, it had an element of stability about it. But this sort of swings would not make it a viable option as a currency.
No, absolutely not. I mean, there are numerous reasons why you couldn't use Bitcoin as an alternative to fiat currency for everyday transactions, and one of them is the volatility. The swings you have are far greater than you would see with any normal, vaguely robust fiat currency.
Now, if Bitcoin is a little dodgy on that, is there another one that's a takeaway from this? I know central banks, we've talked a lot about central banks and climate change, but central banks are very much into form of cryptocurrencies based on blockchain. We've seen the Swiss have looked at it. Mark Carney has suggested it. The Fed was worried about Libra, but how far down the road are we before a central bank says, here it is, everybody, sign on up?
We are moving there very, very rapidly, and I certainly think within the next year, 2 years, we will see some major announcements coming out. We've already seen, in fact, from a number of the major banks within the US, they're already, JP Morgan, Wells Fargo have developed their own digital currencies. And certainly, to go back to China, what's particularly interesting, you could argue that what's happened in China is almost a kind of a preemptive strike against other cryptocurrencies, because China itself is exploring the digital currency option.
Good to see you, sir. I appreciate it. Thank you.
Cheers.